Hi everyone, thank you for joining us. Today we'll be presenting our project on enhancing loan approval systems using deep learning. This project is co-presented by Aldrich Pinto, Rohit Singh and Varun Gasala. This presentation outlines how advanced neural networks can transform traditional banking processes, making loan approvals more accurate, fair and efficient. This is the agenda. So let's dive deeper into the context. Loan approval decisions are a central part of a bank's risk management and directly impacts profitability. Traditionally, these decisions are made on credit scores, financial history, manual reviews by loan officers. However, this process is not only slow but also prone to inconsistencies and bias, resulting in the risk of approving poor quality loans and rejecting good applicants. With the advancement of AI, particularly deep learning, there is an opportunity to revolutionize how banks evaluate loan applications. The key question we asked was, can deep learning make this process more accurate, fair, and efficient, reducing human error and enabling broader financial inclusion? So our project set out to achieve three main objectives. First, to evaluate deep learning models, specifically convolutional neural network, tabnet and autoencoder in predicting loan approvals. Secondly, we wanted to enhance both the accuracy and interpretability of these predictions, providing banks with transparent and trustworthy decision tools. And third, we aim to minimize bias in the approval process, accelerating decisions and making them more consistent. Contributions include a head-to-head comparison to these models, an analysis of their strengths and weaknesses. Coming to the dataset description, we train and evaluate our models. We used our dataset from Kaggle containing 5,000 applicant records and 14 features. The features include demographic data like age, marital status, financial details such as income, mortgage value, behavioral data such as online banking, credit card usage. A few examples like an applicant's family size might influence risk, as might their pattern of credit card usage or their overall debt to income ratio. Coming to the methodology part, so we did pre-processing, which is cleaning the data. Then we did some exploratory data analysis to spot inconsistencies. We divided the dataset into 90-10 train test split, and then we used CNN for hierarchical feature learning, tabnet for attentive feature selection, and autoencoder for compressed representation and anomaly detection. And here is the methodology part that we followed. So coming to the model details, so firstly, the convolutional neural network. While traditionally used for images, CNNs can also capture complex relationships in the tabular data by learning feature hierarchies. Next, TabNet, a state-of-the-art deep learning model designed specifically for tabular datasets. TabNet uses attention mechanism to focus on the most important features for each decision, enhancing both performance and interpretability. Finally, autoencoders. These models compress data into a smaller representation, which helps in detecting anomalies or outlier applications, making them especially useful for flagging potentially risk loan applicants. Together, these models cover accuracy, interpretability, and anomaly detection. As shown in this table, the CNN achieved the highest accuracy of 98%, followed closely by TabNet of 95.6% and autoencoder of 88%. In terms of precision, recall, and F1 score, CNN consistently led the pack, reflecting its ability to capture subtle patterns in the data. TabNet, while slightly less accurate, stood out of its interpretability, helping us understand which feature most influenced each decision. Autoencoder performed well in precision and recall for identifying anomalies, which is valuable for fraud detection and risk management. So, CNN outperformed the other models because it excels at learning complex non-linear relationship in the data, a big advantage for new and financial decisions. TabNet's unique strength lies in the interpretability, helping both bankers and regulators to see exactly which application features drive approval or rejection. This is all about it. Thank you.